Hello, everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. There was a time when OPEC, and in particular Saudi Arabia, controlled the world's oil supply and prices. But record production from the U.S. has begun to challenge Saudi Arabia and OPEC as they desperately cut their production to boost crude oil prices. In fact, repeated production cuts from OPEC since 2022 has actually been a blessing to the U.S. producers, with North American producers easily making up the production cuts from our friends at the OPEC. Strong U.S. production and a bullish outlook for oil in 2024, coupled with U.S.'s impressive economic growth, fear of recession fading, and lower inflation bodes well for today's income pick, Permianville Royalty Trust, traded on New York Stock Exchange under symbol PVL. John?
Yeah, thanks, Mo. Permianville Royalty Trust is a Delaware statutory trust that owns rights to receive, I think, 80% of net profits from the sale of oil and gas production from conventional properties in Texas, Louisiana, and New Mexico, as well as unconventional assets in the Permian and Haynesville basins. Now, conventional oil and gas properties use vertical wellbores, where unconventional resources are extracted through horizontal wellbores. That's the only difference. The company is straight up about its monthly dividends and notes that the amount of its distribution will fluctuate depending on the actual production volumes, oil and gas prices, the amount and timing of capital expenditures, and the trust administration expenses.
On that front, this company recently declared 2 special distributions. Could you elaborate on that?
Yeah, I'll have to do a little bit of a backstory first, and I'll try to make it as quick as I can. Now, as a monthly dividend provider, Permianville releases its financial results every month. And as expected, it can fluctuate pretty wildly. In October, it recorded oil cash receipts associated with the trust of $2.4 million, with an average price of $73.07 per barrel, and that's up from $0.1 million from September's cash receipts. This resulted in a monthly dividend of 6 cents per unit for a current yield of 16.58, which is pretty massive. But now that's a solid payout, but you need to keep on top of commodity prices and management's monthly comments. For example, during the 2020 health crisis, Permianville suspended its payout from July 2020 through July 2021. So not a surprise that the payouts in those 2 years were really low. Not a big surprise since the pandemic gutted much of the energy sector. Now, fast forward to today, and in November, the trust recorded oil and gas cash receipts of $2.8 million. But because of elevated capital expenditures, this helped lead to a shortfall of $1.2 million. Now, as a result, there will be no monthly distribution paid in December. Unit holders will not receive a monthly distribution until the net profit shortfall is eliminated. But on the positive side, if history is any indicator, that shortfall should be easily covered with positive net profits in early 2024.
Now, dividend hogs may not like the fact that it skipped a monthly distribution, but with the variable dividend schedule based on production and earnings, you know that the company will only pay a dividend where it can. This essentially means that Permianville Royalty doesn't overextend itself and get into financial trouble over the long run and have to suspend or even eliminate its dividend policy.
Moreover, the $1.2 million shortfall in November was a total anomaly related to several big projects, exploration and production projects. It's actually quite uncommon for Permianville Royalty to skip a monthly distribution. Then there's the other end of the spectrum. In September, it announced a special distribution of 0.069 per unit, and that special distribution represents net proceeds to the trust unit holders from the $6.3 million sale of certain oil and natural gas properties. Then in November, it announced another special distribution of 0.077 per unit. The second payout represented the majority of the remaining net proceeds from the sale of oil and gas properties in the Permian.
Shareholders don't seem to be too concerned about this missed monthly dividend.
No, they're not, at least if their share price is any indicator. When it comes to energy stocks, their share price will rise and fall with oil and gas prices. This is not a total surprise. Crude oil is down from its June 2020 highs of $120 per barrel at around $73 per barrel. Meanwhile, PVL stock is down from its June 2022 highs of $470 to around $1.95 per share. Now, despite the slip, Permianville Royalty stock is up more than 5% over the last month, and that's around the time when it announced it was skipping its December dividend. Now, for technical traders, PVL units are at an interesting spot, with $1.95 being the trust support level.
John, thank you so much for your analysis. Just to recap, Permianville Royalty Trust owns a stake in hundreds of wells across Texas, Louisiana, and New Mexico. And for the most part, it has been a reliable cash cow that provides investors with ultra high yielding monthly dividend. And it must be said, royalty trusts may not be for every investor. Those above average payouts come with above average risk. Permianville's dividend will swing up and down with energy prices, and those distribution will decline as the partnership wells run dry. But for those investors who understand the benefits and risk of a royalty trust, they can provide an attractive income stream. That's it for today. And make sure to go to incomeinvestors.com now to get our special reports on our top 3 stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.